Good morning, everybody. It is Monday, April 28th, and as we head into month end, we are going to start our prep here for the big week that we have coming. First, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. We can start off here by looking at the S&P today, and we'll recap on gold and go into some other charts as well for you. And remember, if you are interested in getting these charts and some of our tools, we do have access through our private professional Discord through our website at Sticks Trading here. And if you are interested in having access to all of our proprietary tools and learning how we trade, we do have courses as well that you can look into. Um, but for today, we are looking, made it from the inside the rotational zone up to the upper rotational edge on Friday. And today we're looking for rotational between 55.68 and 54.74. If we get over 55.68, then we'll look for that upper end at 56.15 to 56.43. And the key point here is our line in the sand is at 56.05. Our minor line in the sand, we are just above here, which is right at 54.91. So we are going to be constrained until we get outside of those, either same direction on both, either to the upside or the downside. And we have a lot of catalysts this week that we want to pay attention to. Um, we have JOLTS tomorrow. We have all the jobs reports. So JOLTS, ADP, and NFP this week. We also have Apple and Amazon earnings and Meta earnings this week, which will be key as the rest of the Mag 7, with the exception of NVIDIA, will be reporting, and that will be right in the month end and the beginning of the month. So we get the window dressing going on in the next couple of days before we get the shift, and then next week we have FOMC. And so NFP is Friday. That's our key one. When we look at how the insurance is positioned, we are complacent. Nobody seems to care. Nobody is concerned. And again, that's when the storm can be bad. So we've gone over this many times in the past on our videos. And the big key we want to pay attention to here is that this brings the chance for selling pressure early in the week as people will buy insurance going into these key events. If they don't, then those events become even more risky. If they do, then we see less risk on the event, but we see that downward pressure in advance, and then usually a retracement back up as the insurance providers look to balance their books ahead of the data. So we have JOLTS tomorrow. We have ADP and GDP on Wednesday. So GDP is going to be the end of the month. And then we have NFP on Friday. Those are the catalysts that we have. Then we also have earnings between Apple, Amazon, and Meta coming on Wednesday and Thursday this week. And we always want to be aware that POTUS could speak at any point and shift his rhetoric from what has been more calm and tame the last few days back to more volatile. And we see this in our multi asset volatility. We're coming down to the key level of 20 on the VIX. Um, and that would signal, again, a bigger shift coming. But on the futures of the VIX, we need to be mindful because there is a gap from the beginning of April. So if you do have CFE data, you can take a look at that. That would be a gap fill down to 1870. And that's when we should see a spike back in volatility if we get there. Now, again, that's on the futures, not on the VIX itself. So if you do have access to that, pay attention closely because that's when we would look for volatility to begin to spike again. If we look at our positioning here for the COT, so, and then we'll go back to these others. Commercials are net long, and we could take a look at how this played out, but they are net long the S&P and they are long the VIX. So they are protecting that position a little bit. The big sign here, the dollar. Net long and nearing a 3-year max position. So that is key. And then Bitcoin traders did go back to net long, and they have been playing that game very well. So if you are in the crypto space, that would be one to watch. Now, on to what's happened. And you can see these positions take a long time to play out. Again, if you are in our professional Discord, you have access to all of these. But you can see that we went net short, and these positions take quite a while. But that move from October and then down is when they covered, and they made about 7 to 8% minimum on that short position they were building, and now they've gone long, and we've seen the bounce from the lows. And so, as long as they are long, we can look for them to continue to buy, and eventually, as we saw back in 2022, they will continue to buy, but eventually they will push the market to liquidate that. So we want to watch those triggering levels as well as the open interest there. And then on to the dollar. Again, when the dollar rises, we typically see commercials shorting the dollar. Again, if you want to short, you short at higher prices. And as everybody else chases price, commercials are making the market by selling into that and going short. And then we drop price and they cover. Price rises again. We begin the short. It drops. We cover. Now they're net long. And this runs counter to Trump's agenda. Back in his first term and even now, his focus has been on trying to weaken the dollar. That will make exports cheaper and will also play into his tariff game. But if commercials are net long, what we want to watch for is a push in the dollar that would run counter to that, and then changes in policy coming, or at least rhetoric changing, and watching this shift here. So the dollar is always where we want to pay attention. It's always a key factor. So this is what we're looking at in terms of our weekly COT. And then if we look at gold, so we put this out on Friday. We mentioned that lower rotational band at 33.68.70 or 32.68 to 70 is where we would be watching for a buy, and we came right down to it. You can see right here, and then a nice 50-point move up. So hopefully many of you were able to capitalize on that. We laid that out about an hour before the buy started on Friday, and 50 points on gold is usually a pretty good trade for day traders. So we were happy with that. Hope you guys were able to capitalize. As far as today, we look for rotational between 33.58 and 32.50. I'm sorry, 33.43 and 32.58. That'll be today's rotational zone. And so we'll look to trade those edges as gold is consolidating a little bit more. On to oil, and then we'll round out with NASDAQ here. We are over our line in the sand on oil. So again, at 55, we expected that Saudi Arabia would come in and begin to deploy some capital as their economy is built on oil holding $55. And so that was the easiest trade to see. And then now that we are over the line in the sand, we get a little bit of dampening in terms of volatility. And remember, oil is a good proxy for geopolitical risk. So if we start to see rhetoric tuning up or comments on tariffs or anything, as we've seen this morning with North Korea deploying troops for Russia, the oil market isn't signaling that that's a big factor at this point. And we'll watch this because this is where traders would begin to buy, panic buy, if they think there's going to be geopolitical risk. So today on oil, we look for rotational between 63.64 and 62.02, and it's going to be better to trade those edges as we have been consolidating and more sideways lately. And then lastly, on to the NASDAQ. We have been trending a little bit more on the NASDAQ, trending up, and we are over our line in the sand, both line in the sands, major and minor, on the NASDAQ. So those are both keys for us, and we want to watch a little more closely in terms of our rotational band of breakout of 19,605. If we do get over that, we're looking for 19,812. Staying under 19,605 will bring 19,380 and then 19,192 into play. That would be what we watch for. And again, you can see this, and you can toggle on and off VWAP if you want to see how this aligns with these levels. But so far this morning, we have not been able to get over that rotational zone. We've pushed up to it a couple times and we can't quite get there. And then again, in terms of our key areas, 19,500 is going to be very critical. That is a high dollar amount place, a high liquidity point. Getting beyond that, we will look for around 19,680, which again would put us right around over our upper rotational band and before our upper targets at the 19,800. And if you guys have any questions, please post them in our room. Happy to go over these and show a little bit more if there's anything else that you're interested in or other instruments. And we will be doing some analysis this week ahead of earnings on Apple, Amazon, and Meta so that you can trade some of these after hours and then how to correlate that with the NASDAQ. We did that last week with Google and we laid out the key areas. We also did that with Tesla, and the 250 was going to be your key, and we got the 250.10 before selling down. Again, these are very easy trades to see. It's better typically to trade the NASDAQ than the ES on those. It gets a little more volatility, a little more volume, a little better ranges. And we've traded these live in the past with NVIDIA earnings back in February of last year. And it becomes a very easy trade if you know where to look and what you're looking for, and then pulling that through to your equity indices. So we'll put that out into our professional room for you as well this week on some of those earnings. And remember, the number one thing we control, guys, is our risk. And so be sure to pay attention to how much you're risking and you make sure you survive in this game. That's going to be our biggest key. So have a great week out there, and we'll see you again tomorrow.